Alright guys, here's a January recap of the main hype plays that you've probably seen in our recent articles. This is how I would hypothetically, or I did, trade them. Let's get into it. So, in the beginning, there was a bankruptcy sector run, and that bankruptcy sector run involved all the meme stocks. That's AMC, BBBY, and anything that looked like it was dying, but then it turned around. So first thing we're going to talk about is GNS. Now, GNS, you probably already heard it from my stream or other videos. At the end of the day, this one had a naked short sell pump. Short sellers brought it below NASDAQ requirements, and an FBI officer was hired by the CEO and the people that were a part of this anti-naked short selling movement, and they pumped the stock. At the end of the day, this stock had a very slow grind on its first green day, and I would not trade it on its first green day because I recognize the slow grind. And that is a textbook, you don't short that because there's no bag holders. There's no resistance holding this down. And going into the second day, we at least knew that there was a high from the previous day that we can use for a second green day. All the people that tried to short after this one did a crack, assuming that that was enough of a panic to shift the momentum, they were all squeezed into oblivion. They were squeezed all the way up to $5. Now, when this did a very large panic, that was a sign that momentum shifted. And it was a full 100% from the yesterday's high. So it was considered a full breakout. Because of that full breakout, a lot of people were comfortable taking profits and shorting into that, expecting it to go all the way back to 2 to where it could bounce off of a reasonable support somewhere between the consolidation and yesterday's high. That's how I would trade it. But what happened is this found support around $3. Now, when it found that support around $3, people think that normal pump and dumps, like from China, liquidity forced into the chart. Sometimes it takes half a day to 2 days before it gaps down intraday and then bounces a little bit, consolidates and gaps down again. Or it can gap all the way up, gap down in a panic, consolidate, and then consolidate through the night and gap down in the morning. Everyone expected that gap down in the morning, and what happens is all those people that loaded up the previous night and then chased into the morning, they were squeezed the entire day, which is another reason why we don't look at these multi-day runners when they have slow grinds, because all those back holders from the first day and the second day, they were slowly squeezed out of the chart. Now, on the fourth day, I'd be looking towards how this didn't do a full break like it did the first to second day. Instead, it was just about 10% over yesterday's high. And that gave us an idea that this will be a stuffing candle on the daily chart. I probably short into the push. Now that's how I would trade GNS. Outside of that, I wouldn't know what to do other than obvious support and resistances. What I'm looking for is layers of resistances, lower highs. So here's your lower high, here's your layers of resistance, and you can short into, but all I want to see is evidence of liquidity leaving the chart after it's been forced inside. The next ticker around that time was BBBY. Now BBBY, this one was a lot simpler. It had a top already. A lot of people remember when it ran before. Well, the closest resistance we had was 51 million on the daily chart, and it stopped at 551. The way I would have traded BBBY early January is I would have ran the stock into that 51 million resistance, and when it went to 50 cents off of that previous resistance, that's where I'd be ultimately risking up to $6. When this went to 580 and showed that that resistance is still worthy and activated, I'd be sizing into that push. Now, the only time I'd size into that push is if that push happened in the morning. But because the push happened towards the later half of the day, when most of the squeeze put liquidity into the chart, I just don't feel comfortable holding this overnight because this can easily gap to $10 next time it does a full breakout. What you can do is once you saw there was a gap down and you woke up the next morning, the amount of volume from yesterday's squeeze, we'd be trading into the morning push, risking the volume that was trapped in yesterday's close. That's how I would trade BBBY safely, pretty much as a overextended gap down on the multi-day chart, or more of a first red day on the multi-day chart, because you can trade the day after that massive pull the same way, trade into the consolidation, and you'd be going for a 1-to-1. That's how I would trade BBBY. Okay, so this is BZFD. This is BuzzFeed. BuzzFeed went up on Meta and AI assisted news. At the end of the day, I wouldn't have traded this on the first day because it had a slow grind. Even though it was very extended, if I did go in, it'd be extremely small, just trying to make sure there's a lower high on the top. But at the end of the day, I didn't touch it. When it went into the second day, we saw the slow grind from the first day. So we didn't touch it because AI plus Meta, which had its earnings coming out over that weekend, didn't seem like a good idea. When it did a consolidation and trapped a lot of people, formed this lower high after a panic of over 20%, this showed two pieces of evidence that can gap down the next day. All we needed was a gap down overnight. And when we had that gap down overnight, we were looking for a morning push into the consolidation, risking the morning high or the top of that consolidation. And then when this cracked, that showed that it was very weak. And when it came back with a lower high, that was the confirmation that we needed to hold this the rest of the day. And then you could have held that into the next day, waiting for the gap down. That's how I would trade BZFD. Now with Cosmo. Now Cosmo is a healthcare stock. Cosmo went up to $24. All the way from 30 cents. It had a reverse split. The reverse split happened and it went to 30. When I woke up and went on the stream, it was around $3. I ended up going long at 4 and covering at 4. And the reason I did that was because there was a pre-market high of 6. Shorts wanted to go in right now when they were impatient. And I heard Steven and other patient shorts, they're waiting till it matched the pre-market high for a minimum before even thinking about going in. And so because I knew a lot of the people were not thinking about a short at all, especially since it's a reverse split, which refreshes all resistance, overhead resistance in the history, I wanted to close the gap. I wanted to fill the gap between the pre-market high, the pre-market stock price. So I entered at 4 and I exited at 4. When it went to 12 o'clock and it didn't move as fast as I thought it would. After I covered throughout the day, news went out that there was an error inside of Robinhood. They said naked short sellers were getting squeezed. It took 57 million for Robinhood to cover all those short sellers positions at the end of the day because it ran up to $24 on those people that bought before the split. They ended up naked short selling a lot and then getting squeezed up to 24. Now, the way I would trade this is I would have went long, trying to get the gap fill up to the pre-market high. And I would have went short at the pre-market high. I would have changed my mind since this went past the morning rush and it was more of a grind. I wouldn't come back till 1 o'clock and then I'd still be looking towards that morning high. So right here where this went to like 680, I'd be thinking that there's just going to be a perk above that. And then I'd take a small loss there and then get grinded again. I would have took a loss as a short on this. That's how I would trade it, COSM. When it comes to MSGM, MSGM is a gaming company. It is a microfloat. Now with this microfloat, we are very hesitant to trade it because it's a microfloat. But when we see massive consolidation and parabolics, it gives us the strength to trade because we understand that the momentum is going to shift and we want to get in and get out quickly. Now with MSGM, this one went from $2 all the way up to $27. When this went up to $27, the way we would have traded this after we saw there were multiple tops around the 27 mark, around this dollar range, like under 30, above 20, 28 is a very common number. And 24 is too. So we would have seen a consolidation around 24 and we would have been aiming to get about 17, 18 for profit. Once those areas would hold, wouldn't touch it until we saw a perk right back up to the high. Now, when this consolidated the whole day, we knew this was going to squeeze and we knew it was going to squeeze to at least mid 30s, possibly lower 40s. At the end of the day, this squeezed all the way up to 80. I could have scalped this on the first day that it ran. During the pre-market, when this went up to 80, I was on the stream. I'm saying the only way I would short this is if it did a consolidation after it did its morning push, because I want to make sure that it doesn't go to 100. I want to make sure there's a lower high. There doesn't have to be a panic, but if there is a panic, I'm still not going to short it. The only way I would trade this is if it did a pullback of over 50% and I would buy the dip. And I said that about 7 minutes into the stream, right after I said that, because the stream starts at 8:47. When I said that, I think it was like 7 minutes before the open. That's when we had this offering. The offering happened and it brought the stock all the way down to 23. I probably would have went in closer to 27 and I would have added all the way up to 23, risking 20. Then I would have sold closer to 41 because when I was doing my calculations from the first day, that's where I expected the original squeeze to end. And that's how I would trade MSGM. I would have bought this dip, or I would have shorted after a combination of price action. The only way I would have shorted MSGM is after a basic topping pattern, and that's parabolic consolidate. I just wanted to panic past one of the consolidations so I can use that as a risk, and the high a day. That gives me layers of resistance to use. The other example would have been this long, which happened after a massive panic, and you knew the loss was too big for people to handle. That's the dip psychology behind it. They won't realize a loss that large, so they're just going to buy more, or they're going to just hold. And that's how people end up holding for months. And so this was their second chance to take a smaller loss. And that's how I would have traded MSGM. Now we're going to talk about HPCO. Now HPCO, this one had a resistance about 6 months ago. Its resistance was 30 million. That's actually not that large. It's a light resistance, but it was very far away. Now HPCO, it is a drug company. It deals with marijuana. So the reason HPCO ran is because Snoop Dogg is the new partner for HPCO. When news got out that he's supporting this company, it went into a 30 million resistance. Based off the pre-market volume, the estimate of the day put us at 100 million to almost 200 million volume. And we're going into a 30 million resistance. The resistance was overwhelmed just based off the estimate. And then when we actually got up to the 350 mark, where that top of the resistance was, we saw that it activated. Now with the predictions, like this one from 360 to 280, when we look at this resistance from 360 to 280, we know that that's a very light resistance, and it had a lot of momentum. All right, when we saw the spike into that 30 million resistance, we knew that it was only going to be temporary, because the estimate said that the daily volume, as this chart develops over the day, is going to overwhelm that resistance. And what happened is, this was a morning edge only play. It went to the minimum profit target instead of the maximum, all the way at 180, 160. When we had the squeeze at the minimum profit taking point, it squeezed all the way to a new high. Now the gap down that happened after that, it was because of the panic in the open that this actually lost all its momentum. People saw that once HPCO's resistance was broken, they expected a full break, probably to $7. When it went to only half that amount and then gapped down the next day, everyone sold whatever they could as soon as they could. Now, the way I would trade HPCO is I would have been in on the first push, because I would have treated it as a morning only play. That's only after a consolidation of at least an hour and a half, because I knew the estimate of the day was going to overwhelm that resistance, and I would have took at least partial profits at the $2 mark. But later I probably would have been squeezed because I would have added at the top, and that's how I would have traded HPCO. All right guys, hopefully you enjoyed the recap and you learned something. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.